Hey folks, David Frost, LazyGapTrader.com. You're looking at a live chart, or it will be live in a few seconds, where just before the market opened, AIG was one of the gap trades on my list this morning that went out to subscribers about a half an hour ago, 9 a.m. Eastern Standard Time. There it is. So we opened below the first level that was given out. So traders know what to do with this. We're looking for the second level. So either one of two things is going to happen with AIG. In the pre-market, the bid and the ask was already below the first level, so we knew this was going to happen. So we're looking for the second level. But one of two things is likely to happen within the next few seconds here. Either AIG is going to pop back up above 62.71. It's an important number. And I teach in my course why these numbers are important and why stocks are drawn to them like magnets and then generally have a price reaction in the other direction. And that's how we can utilize these numbers for trading purposes. So either it pops back above and recaptures 62.71, or it trades down to the second level. We would be interested to buy the second level at $61.45. I'm only interested to buy that secondary level depending on how it comes into that level. So I'm not interested if it consolidated, for example, ran sideways for an hour or so above that level by 50 cents, then I don't want it anymore. But I am, look, see, it's trying to pop back up above 62.71. I'm only interested in playing the levels, and this is what I teach in my gap trading course, is I teach a system that teaches you how to figure out where the market is likely to be drawn to and have a price reaction from. On which stocks, I teach you the criteria we use when stocks are gapping higher at the open or lower at the open. It's certain stocks we play these with. And there's certain criteria that I teach in the course. So the stocks have to be gapping down like this one. You know, this is down 6% at the open. That's fine. Look, it's trying to, again, pop back over 62.71, but continues to fail. So what it's doing is it's knocking on the door. And every time it knocks on the door and gets rejected, it doesn't have the key. Can't get in, it's going to go back in the other direction, and it's going to head toward the 61.45. So hopefully that happens sooner than later, and we'll get a trade out of it. I'm not going to wait around all day for this. The market just opened. There's other trades on the board, but this is the one that's, most active, closest to hitting the number. Here we go. All right, so it's starting to break. If we get below 62, it's all she wrote. We'll get there. Come on. Okay. We should get there. The only hurdle between 61.45 and us getting filled is going to be 61.50. Sometimes these stocks will bounce at the 61.50 level. We're looking for 61.45. I just play the mathematical levels that I teach in my course that you can learn how to get these mathematical levels, and that's what I play. I don't like to chase the stocks around. My order is in at 61.45. I'm either going to get filled or I'm not. I don't chase stocks around, and I teach not to chase stocks around. That's a good way to lose money. So we either get filled at our number or we don't. So there's the 50. So we're going to bounce at the 50 a couple of times, and let's see if we can get through it. Oh, look at that bounce. That was a 30-cent bounce in a second off that 50 level. I don't love that. It's got to come into the 61.45 in the next minute or so, or else I don't want it. That was a bounce. That's kind of the bounce we're looking for, not necessarily that fast or that shallow. I'm looking for a little more off this level. Here we come. Come on. Fill me at 61.45. Don't bounce. Come on. All we need is one more push lower, and then we'll get the fill. You see that 61.50 is very, very strong. The market likes those half numbers. They like round numbers, 61 even, 62 even. The market likes the halfway points as well. Here we go. Okay, I'm in. 61.45. Now, what I'm going to do from this point is, I'm going to look for the bounce. We have to recapture 61.45. There we go. Okay. So now, I'm going to put an order in at 61.99. Okay. So what I'm going to do is, and by the way, traders know that are in my trade from this morning, they know that they don't have to look for the full. I'm looking for over 50 cents out of this trade. They don't have to look for over 50 cents. You should get 30 cents out of this trade, and there it is. you're going to get 30 cents. You're going to get 40 cents out of this trade in a heartbeat. There's your 40 cents. I'm looking for a little more. I think this will pop back over $62 a share. I'm not going to give it the chance to come up short. So I've got the order in at $61.99. You have to have a little patience, but that's part of the strategy. So in the gap trading course, I teach a strategy that teaches you which stocks to play, what prices you're interested to either buy or sell short, nothing more, nothing less. We have specific prices we're willing to play the stocks long or short. They have to be gapping up or down a certain amount. They have to fit a certain criteria, meaning the stocks. So we narrow the field. So you have this playbook. And within the playbook, I teach you how to do everything you're looking at right here on the screen, where we had the number 6145. Okay, I also have a whole video module. I'm only a few cents away from getting filled. I'm filled. Done. 61.99 filled. That's a nice trade. Just 6 minutes into the trading day. What I was going to say is I have a whole video module in the course and how I teach you how to get more out of these trades and let some of these turn into risk-free, emotionless trades. But you have to come over to lazygaptrader.com to learn everything I just talked about. Everything you saw is taught in the course. Come over, check it out, folks. I'm David Frost, lazygaptrader.com. Thanks for tuning in, folks.